Welcome back. We're right here at IGF UAE 2024, and it's been a hectic couple of days with the kind of policymakers, corporates, venture capitalists, etc. that we have seen. And of course, I have one such seasoned investor with me right now. I'm talking about Sanjay Nayar of Sorin Investments. Sanjay, hi. Thanks so much for making time for ET Now.
Thank you. Thank you for having me.
Tell me, how's been the investment climate of late in India? Because let's say 6 to 8 months ago, we were talking about a funding winter of sorts. There was a bit of a funding crunch. Have things eased out? How's the deal-making activity been like?
Yeah, so from a venture funding side, which is really my new and my main avatar, I think the money is back. There's no winter. I think people have come back in a much more calibrated way. They're thinking very differently, very prudently. The investors, firstly, not just backing any business. I think being quite careful of the kind of checks they cut, the kind of valuations they're giving. I think that's one part of it. But there's no dearth of money. There's no dearth of good venture capitalists, both Indian firms and foreign firms. And only thing I would add is Indian firms are coming up a lot more in number, which is good for India, because you do need local capital with local fund managers to invest in local entities. From the investee company side, the founders, I think, are also there's a bit of a change there. I mean, the founders now want to have an ability to choose their partner. They have seen what's happened in the past. Not that anybody was wrong or right, but even the founders are looking for people who can add value to them, not just the money, but also add value in different ways. Connecting the dots, adding operational value, introductions, go-to-market strategy, whatever it be. And I think secondly, the founders are looking for people that they can bank on in terms of patience, in terms of, I think, even cultural affinity, the right chemistry. So very interesting change, the so-called winter that you had, I think made both sides, the investees and the investors, take a step back and think hard. So I think it's pretty good. And the other change we're finding is, by the way, the founders who are coming in now are seasoned individuals from companies having worked for a decade, 2 decades, stepping out, putting up fintech companies, health tech, SaaS, and therefore they come with their own money. The opportunity cost for them having left something to start is high. So they're a lot more serious about the business. It's not just yet another idea. So I think this is good stuff. I mean, this is the right time for both sides. And of course, India is obviously a big opportunity anyway.
Yeah, you talked about the local money and the local capital. And of course, you've seen the financialization of savings work out great with IPOs and the public equities. But what about the foreign money? Because whether I look at the FIIs and the public equities or FDI, that's something which leaves you a bit more lacking, right?
Yeah, I think if you start from FPI, I don't have much of an idea. That's the more stock market investing. I would just say that that's probably in response to valuations. The markets are obviously quite expensive, unless you believe in a 20% growth rate, which I don't think is there. And we can talk of that later. I think private equity flows were very strong. They have slowed down, again, in response to valuations. Private equity uses a very different lens, a much more deeper and a thoughtful lens on valuations and how can they make companies better. So they've slowed down a little bit, but I'm sure there's a lot of dry powder waiting for India. So there's no issue of any dearth of capital from the private equity side. And then finally, FDI, which I think is the best quality capital. It is the longest duration, best quality capital, and India needs it, I think, the most of all the other kinds of capital. That obviously comes in response to the growth potential, which we have, the market opportunity, which I think is huge. And then, of course, the navigation into India, ease of doing business, cost of doing business, regulations, compliances, which sometimes I think they get quite frustrated with. So I think that's holding them back a little bit. I think India has done a tremendous job in terms of investing in social, physical infrastructure. This government has done a lot of that. They've done a lot to remove bureaucracy and compliances and legal hurdles. But yet, there is a lot down there. So to attract somebody to bring in $1 billion of FDI, to put up a factory, a plant, still I think there's some way to go. Having said that, I think one of the things that we've been sort of touting is that come along in the form of JVs. It's good to have an Indian partner. Maybe come along in that way, maybe easier. So we'll see. I think the jury is out whether we can attract long-term FDI quickly. We're seeing very early successes in semicon.
Yeah.
We're seeing quite a few examples in automobiles, of course, is doing very well in the auto sector. Telecom, let's see how it goes. But yeah, I mean, there's a market that people want to invest in. It's India. You just got to make the potential realizable and make it easy for them to come in and to get work done. And I think this government is very focused on that. So if anybody can make it work, I think it's
Indians in India.
It's this one, yeah.
Well, yes, let's hope that we'll make it work. But I wanted to switch, focus, Sanjay, to Sorin Investment specifically. And correct me if I'm wrong, but I do understand that you've made a lot of investments when it comes to tech-enabled business, whether it's fintech, whether it's SaaS, whether it's consumer tech, and all of that. Is that a special focus area? Is that the kind of mandate that you've set for yourself?
Yeah, for Sorin, we set a mandate to have tech-enabled companies simply because we think that can help companies come up with unique solutions for India at large, as you call it, Bharat, scalable models, good operating leverage. I think the idea is not to be investing in traditional brick and mortar businesses, but more and more
manufacturing, because that also is picking up apparently, because that's a focus area of this government as well.
No, we can and we should. And but our companies also have brick and mortar. It's like if you look at any of our investments, we have DTC brands. We have 2 fintech businesses. We're just doing something in SaaS. But I'm saying that, to entrepreneurs in India today, the ones that I just spoke about earlier, they're coming up with very interesting solutions and ideas that can solve consumer needs and scalable models. I mean, and for scaling, I think nothing better than using technology in a unique way. And there's so much of tech infrastructure in India that, again, this government has done for the last 7-8 years, investing in the tech infrastructure, the digitalization, as they call it.
Yeah.
That just gives you a massive runway and a massive multiplier to the businesses.
Fair enough. And with the kind of, penetration that we have seen of both data and all of that, it definitely kind of merits that attention. But again, you are looking at making early stage investments, right? I'm intrigued to understand why not that just pre-IPO stage or venture capitalist stage. In the sense, is it the valuations at that time that keep you out, or is it getting very
crowded? It's a different mandate. It's a different mandate. You have funds now in India that specialize in pre-IPOs, late stage, Series D, Series E.
So why did you choose early stage?
We just chose early stage because I think in a way we were enthused with what Nykaa did. We founded, Falguni founded the business, but we funded it early on. If you find companies like that with good founders, with their head on the shoulders, and we can find them at the age of 2, why find them at the age of 12? So looking for companies at the age of 2, 3, and our investors, our anchors, including Sidbi and others, were very keen to find early stage companies. Again, we don't do seed, but Series A, Series B. And I think the second reason is that, besides getting in early, is that we can actually help them also. Our experience of being around for like 4 decades, my team's experience, which is a very experienced team as well, anywhere between 5 years to 15-year experience. You can help these entrepreneurs with the right strategies, go-to-market strategies, hiring people, getting mandates. In fact, one of the companies we're helping expand in the Gulf as well. We got them a few mandates here. So yeah, I think you can do a much more holistic approach. If you go for a very late stage company, that could be a fund also in the future, but not today. That's very different. Firstly, the fund has to be much larger. We didn't have the experience. We were a first time fund. We got 175 million. So with that, you can't do deals of more than $5, $6, $8 million a piece. And I think late stage you could do. Raise another fund for that, but not this fund.
Okay, fair enough. And just last quick question before I let you go. Where are you in that fund cycle? Fully deployed? Or you're looking at raising one soon? Because I know you just raised one round.
We just finished raising it last year.
Yeah.
It was a very quick raise because obviously couple of the large HNI families backed it, including our seniors from KKR, and then SIDBI and others. We have, I think, put money to 6 companies.
Okay.
One is a second round, so 7 investments. We are close to signing 2 more. And with that, I think we would be about just 22-24% done.
Oh,
so we have
there's a long way to go.
Yeah, I would say another 2
and I'm
years.
sure there are enough opportunities available.
They're coming along. They're coming along. I think the one thing I worry about right now is that urban consumption has to come back in every way or form. Rural consumption is doing much better right now. Urban is definitely slower. So, you know, whatever you do, whichever business, there is obviously a consumption angle to it.
Yes.
So you need that to come back with the right price points, the right demand value. So hopefully it will. And there's no better market than India today. So we have no reason to worry. Deploying slowly has never been a problem, okay? Deploy slowly and sensibly. There's no rush.
Yeah, and absolutely. I'm guessing it's just a cycle and transient issues, and we'll be back when it comes to consumption as well. But thanks so much, Sanjay, for making time and speaking with us today.
Thank you, Mishra. Thank you.